How's it going, everybody? It's Stas here. So we had a pretty dang good day in the stock market today, guys. Very solid bounce back. The Dow, the S&P, the NASDAQ all went up 1%. The Russell went up 1.5%. So we got to break it down. In this video, I want to go over stocks I'm looking at, charts I'm looking at, and my thoughts on the overall markets. Is this rally legitimate, or is it another bull trap? We're going to break all of that down in this video, so sit back, relax, take a sip of your coffee, smash the like button if you guys find value, and check out my Patreon if you want. That's linked right down below, and let's get right into the video. So you guys saw, especially if you looked at my video earlier today, we had a Fed meeting today, and I'm sure most of you guys saw that. Even if you didn't see my video, you knew. Who the heck didn't know we had a Fed meeting today? And overall, the conclusion of that Fed meeting is we're not tapering quite yet. Interest rates are remaining at zero. Who would have guessed that, right? It doesn't take a rocket scientist to predict that one, right? And it looks like maybe next meeting we're going to get the taper or more discussion around the taper. And the stock market liked that. You know, the markets loved it. Like I said in the intro, everything went up over 1% today. The VIX got squashed, right? VIX went down about 15% today. And if you guys want a more in-depth analysis of the Fed meeting, go check out my video from earlier. We're not going to talk much about it in this video because, again, I made a video earlier about it. We went over it for about 10 minutes, so go check it out. And let's talk a little bit about whether or not this rally is legitimate. I actually think it really could be. You know, there's a lot that's going on right now, and there's been a lot of uncertainty in the markets regarding the Fed meeting, tapering, what's going to happen. And now that we kind of got past that, even though some people really they expected nothing to happen this time around, it was still uncertainty. So now that we got past this Fed meeting, right? And sure, the whole Evergrande situation, China, that's a big cloud over us, which I'm not too sure if that's going to affect the U.S. markets. But now that we got past the Fed meeting and we kind of have a couple of weeks until the CPI data comes out, I believe on the 13th of October, maybe the 15th, I forget. Now that we got past this meeting, I feel like we could breathe a sigh of relief in a sense, right? And the markets are kind of already doing that because you can see we had a nice rally all throughout the day today, even a little bit after the meeting. You know, we did have some volatility at about 2 p.m. on the East Coast. We saw a big spike up, then we dumped down, then we popped back up. But overall, I mean, it seems like the market sentiment in terms of this, the technicals, right? The price action is bullish, especially the past couple of days, even, you know, around the Fed meeting, I'd say, I'd argue it was pretty bullish. So at this point in time, I feel like we could see a further rally. That's kind of what I'm thinking here heading into the next couple of weeks. Whether we do break out tomorrow, later this week, next week, I have no freaking idea, but I think we could get a rally. And one point that we have to see break on SPY is 442. That is right by the 180 SMA on this 20-day chart. That is very, very critical, considering that's been resistance for the past couple of weeks. So before we even get this rally, I'm going to tell myself and everybody out there, slow your horses a little bit because we're still technically in a downtrend. So before we even get this little what would you call it? A W-shaped recovery. You got the W right here forming, and we're kind of halfway in, you know, the halfway making the right side of the W, if that makes any sense. Before we even get this rally, this rip, we got to break out of 442 on SPY, that is. So I'm going to put my alert right there, and we'll see. You know, do we break out of there? Do we fail there tomorrow, this week, next week? I have no idea. And we kind of need some more price action before we even determine whether or not this is a bull trap or a breakout rally quite yet. We just need more price action. So we'll learn later this week, most likely. Tomorrow is going to be huge. Friday is going to be huge in terms of price action because let's say we have a green day tomorrow, green day Friday. That's going to get us out of 442 most likely, and we're going to be rallying hardcore from there, at least until the CPI number comes out and we get more clarity around tapering, which again, we didn't get much clarity today. We got a little bit in terms of, inflation, the labor market, and we talk about that in my video earlier, so go check it out. But in the meantime, I think we could get a rally here. So QQQ, very similar, right? 20-day 1-hour chart. We're right under that 180 SMA. We got to break out of there. So I'm going to put my alert at $373 per share, and we'll see if we end up breaking out of there, whether it's tomorrow, the next day, next week. I have no freaking idea. But overall, I'd love to know what you guys have to think. Let me know in the comments. Hit the like button if you guys find value. And I feel like there's so much money out there sloshing around, like so much money being printed, and a lot of people, these big institutions, even retail investors, have so much cash that they're waiting. These dips don't last long because there's so much money being put to work, waiting to be put to work, that whenever we see a little 5, 6, 7% dip, people are rushing to pick up the dip, buy the stocks, buy the dip, which is another reason why I feel like now that we can breathe a sigh of relief after the Fed meeting, we might get a rally because there's so much money to be put to work. We have a little bit more clarity right now. That's just a theory. So let me know your thoughts again down below in the comments. Smash that like button. And now let's talk about some stocks here. A lot of news today came out about two stocks in particular. Robinhood, number one. We got to go over what's going on with Robinhood, ticker symbol HOOD. This went up 11% today, went up about $5 per share. And you guys know, if you've been a user of Robinhood, I've used it before, even though I have pretty much no money on Robinhood right now. I don't use it at all. Well, that's a lie. I actually do have $50 worth of Dogecoin. I bought some Dogecoin at like 60, 70 cents. No, not 70 cents. Maybe 50 cents is my average cost. I had it like $100 of Dogecoin. Now it's cut in half plus some. But other than that, I have no money in Robinhood. And you guys know that you can do crypto, trade crypto on Robinhood. But the thing is, the big thing is, which I don't like about the crypto trading on Robinhood until now, you don't own your private keys. So you don't actually own your Bitcoin or any other crypto that you can trade if you're trading it and holding it on Robinhood. In essence, it's pretty much useless. Sure, you can make money short-term trading, but if you want to own your crypto, your Bitcoin, whatever, you don't actually own it on Robinhood until now. Well, hopefully in the next couple of months, weeks, whatever, this starts to come into fruition. Robinhood is now testing crypto wallets, which with select clients next month, to allow investors to send, receive, and move crypto in and out of the Robinhood app. The startup debuted, and this actually shocked me. They debuted, if I could say the freaking word right, cryptocurrency trading 3 years ago, but it has become increasingly important to the company's top line, and more than half of Robinhood's transaction-based revenue last quarter came from cryptocurrency trading. That's up from just 3% a year earlier, which just shows, guys. Let me say that one more time. More than half of Robinhood's transaction-based revenue last quarter came from crypto trading. That's up from 3%. So from 3% to 50%. That goes to show the crypto craze, how many retail investors are involved in crypto, trading it in and out. So much money is being generated from that when it comes to Robinhood, and this is a good move for them. I mean, it was going to happen sooner rather than later, the crypto wallet, and I guess now they're getting the the logistics down behind it. I'm not sure. Obviously, I don't work at Robinhood, nor do I ever want to be honest. But yeah, it's a good move for them. It's a good move for them. But I'm still not investing in the stock, so don't even ask me that. I said that before, guys. I'm not really interested in investing in Robinhood. I don't really plan on it unless it gets to $5 somehow, which I might throw some gamble money at it at that point. But if it gets that low, they're probably going out of business because a low stock price is a sign that the business is not doing well, especially if it's dropped 80, 90%, which if Robinhood were to go to $5 from $85, that would be an 80 to 90% drop. More like 95, actually. So what do you guys think? I mean, Robinhood's now breaking out of the 50 moving average here. It's starting to show some momentum. RSI is a bit overbought, which is a bit worrisome in the short term, but I think there could be some room to run here. And like I said, I'm not looking to invest in Robinhood, but that doesn't mean I won't short-term trade it. I might actually. We'll see how it goes. So let me know your thoughts on Robinhood. Facebook is another one which saw some news today, and amidst all the green we saw, pretty much every stock I track was green today. Facebook was red. It went down $14, down 4%. It closed at 343. The recent all-time high was 384, so that's putting Facebook down about 12% from the all-time high. So it's officially, with today's 4% red day, it's officially in correction territory right now. And we got some news that Facebook's CTO, Chief Technology Officer, Mike Schroepfer, I hope I'm saying that right, probably not, but he ended up announcing today that he will be stepping down from his role. And I was reading, he's been there for 13 years, I believe, which is a long time for being with one company these days. You know, a lot of these big-time people, not all the time, but they move around every couple of years. So 13 years with Facebook, that means he's been with them since really the beginning. I mean, 13 years ago, that was 2007, 2008. That's when I actually got my Facebook account, believe it or not. You know, I think I got it once it started coming out. You know, I was, what grade was I in? I was in high school then, guys. That's crazy. Actually, no, I might have been, no, I think I was in high school. Anyway, it doesn't matter. Yeah, you know, that was crazy. Good times. So he's gone. He's gone. He's going to go down to a part-time role with the company in 2022. And on top of that, which could be contributing to the drop today, Facebook admits underreporting ad performance, citing Apple's privacy update. Let me show you guys this right here. I'm not sure if you can read it, but Apple gave iPhone and iPad users the option to opt in to being tracked when first launching an app, and I guess they could opt out as well. And let's see here, if we go down a little bit, that's a scary thing. Facebook, it's a great company, but if these devices, they allow you to, you know, hide your privacy or allow you to, what am I trying to say here? Pretty much opt in or opt out of being tracked. This will screw up the targeting aspect of the Facebook ads, which is why Facebook ads are so good in the first place, because you can target literally anything on Facebook ads, you know, race, gender, where you are in the world, your interests. It's just insane. And if you want to be more private with your iPhone or whatever device you're using, that is a problem for them. So I don't know. I don't think it's going to affect them too much because these companies, I mean, come on, they are kind of in cahoots with each other, but they're also competing at the same time. It's I don't know. We'll see how it goes down, but as of now, it's down 12%. I think ultimately Facebook being a massive company, large cap, it's not going to collapse. It's not going to go down 30, 40%. It could go down 15%, another couple points from here. It's possible, but ultimately, I think this dip will be bought up. So keep your eyes on Facebook. I for sure am. SoFi is another one that is just ripping today. I mean, it had a rip-your-face-off type rally, and it's still going up after hours. It's up 12 cents after hours. SoFi went up 11%. It closed at $16.84. Now it's at $16.96 after market hours, and it's completely breaking out. It's above both moving averages. It's trading above the downwards channel here, and now we're close to the highs from the middle of I was about to say October. I meant August. Middle of August at about $17.50, $18 per share. So I'm long SoFi. You guys know that. And I'm selling covered calls. I already did a couple weeks ago, or maybe a week or two ago. My average on SoFi is $14.86. Sold the $17 October 1st calls. We'll probably get assigned considering we're right at $17 right now. But that's okay. I took that into account. I understood that when I sold the covered calls. And quite honestly, guys, listen, if I get assigned, which I probably will, I made 13%. I would make at that point from $14.86 to $17, 13% on the shares, which for a month of holding, I can't beat that. You can't beat that. Plus, I keep the premium, which I made, I think, 40-something cents per contract premium. So I'm cool with that. I'd give up my SoFi shares, and if they were to dip, maybe I'd buy them back, sell more covered calls at a higher price. I'm cool with it because, quite honestly, SoFi is a stock that I'm not married to. I'm willing to give it up, and I'm not going to lose sleep at night giving it up at 17 when I bought it at 14.86. I'm really not. Even though we could see more upside, I'm fine with it. So SoFi, I like it. It's breaking out. It could keep going. It really could keep going at this point. Especially if we break 18, this could be off to the 20s in no time. So let's see Blackberry. They just reported earnings today. The stock closed at $9.56. Now it's at $10.20. So I'm assuming decent earnings were reported. Let's see here. Let's go down a bit. Where are these earnings? Let's see. Loss of $144 million, revenue of $175 million. So they lost $145 million. They didn't make 175. The top line was 175 million. What were the estimates though? Oh, here we go. -6 cents EPS versus -7 cents EPS estimated. So they beat EPS. They beat revenue, 175 million versus 163.5 million. Not too shabby there for Blackberry. And you guys know this is a stock that I would not buy for the long term. There's no way. But with it being a hype stock, Wall Street bets oriented stock, I watch it sometimes. I keep my eyes on it just in case we do get a crazy pop, a squeeze, whatever the case may be. And in this case right now, we're up about 70 cents after market hours. We did get up to about 10.50, so we were up almost $1 after market hours. And you guys can see we're fiddling with both moving averages right now on the 4-hour chart. They're acting as resistance. So I would love to see Blackberry break out of about 10.50, 11. I think at that point it could start gaining some momentum to $12 plus. We'll watch it from there. Peloton's another one that's been getting slammed. Today it went down 6%. They had some presentation with Goldman Sachs today. I didn't tune into it, or I didn't really pay attention to it. But as I was prepping this video, I saw in the live news tab, they had a presentation with them, and I'm assuming it didn't go well or something like that. I got to look deeper into it. I couldn't really find anything on it. But the stock went down 6% today. It's trading well within this downwards channel. Now it's moving under both moving averages, which isn't the best sign, technically speaking. I got to be honest with you all. It's not the best sign. But if you're looking at this as an oversold play, hey, you may be onto something, considering it's $94. It was $130 a couple months ago. That's putting the stock down 25 to 30%. So it's well in a bear market. It's getting hammered. Again, we're towards the bottom of the channel, where a couple weeks ago, actually, it was literally 10 days ago, 12 days ago, we were at the bottom of this channel at $97. We had a rally back to 115, 120. I'm not sure why it rallied that day, though. There had to have been a catalyst for it to move that aggressively. Let me see here. I don't even know, honestly, guys. I'm trying to look back here. What the heck happened that day? Anyway, we saw a big rally. Now we're back towards the bottom of the channel. Maybe we get another rally towards 105, 110, 115. So keep your eyes on Peloton. Nvidia is another one that's making a move today, up 3.2%. Looks like we're holding the uptrend. We moved above the 180 SMA. Now we're right by the 50 SMA on the 4-hour chart, which has been resistance. You guessed it, the past couple of days, 10, 15 days here. So I want to see if we break out of that. It looks like we're trying to here after market hours. We're up about 50, 60, 70 cents after market hours. So if Nvidia could take this 50 SMA out, it could start breaking the 20-day 180 SMA as well, which has been resistance the past 20 days roughly. That could be a reversal. That could be a sign that Nvidia wants to go back to 230. maybe even higher. So keep your eyes there. And Marvel, MRVL, is another one that I'm looking at. This one went up almost 3% today. It's trading above both moving averages. We're holding the uptrend. It's looking pretty bullish from my eyes. But now we're just so close to breaking out. We just got to break the top of the wedge. You guys see it's making lower highs at the same time that it's making higher lows. It's been in this pattern pretty much since the middle of August. So if we take out, let's say, $63, and we also break the high from the 15th, 16th of September at about $63, that is where we could get the next leg up on Marvel Technology. So I'm going to put my alert for this one at $63 per share. We'll watch what it does from there, guys. So overall, that's pretty much it. Robinhood, Facebook, SoFi, Blackberry, Peloton, Nvidia, Marvel. We broke down the markets. It was a fun day today, but I'm even more excited to see what happens tomorrow. Tomorrow and Friday, 2 big days coming up after the Fed meeting. Let's see how the market digests the Fed meeting. Let's see if we break out of those key levels that we went over with SPY and QQQ. That will determine whether or not this is a bull trap or if the rally is legit. So if you all found value, hit the like button, subscribe, let me know in the comments your thoughts, and check out my Patreon. If you guys want my real-time buys, sells, call-outs, morning update videos, private Discord access, and more access to me throughout the day, all of that's on Patreon, link down below, or you guys can simply go to StasserFest.com/Patreon. That's StasserFest.com/Patreon. Check out my M1 Finance link for $30 as well, link down below. Same with the Webull link. All you have to do is deposit $100 into both of those platforms. You get $30 from M1, and you get 2 stocks from Webull up to $1,600. Thank you all for showing up, watching these videos. You're awesome. I appreciate you. And shout out to all our Patreons or patrons, whatever you call it. You guys are awesome too, of course. I really appreciate all of you out there. So I'll catch you guys in the next video, which is the Fed video. I'll pop it up here. Check it out. Thanks for watching. Keep crushing the markets. Stay safe out there. Peace out, guys.